Good afternoon, everyone, and good morning to those of you joining us on the West Coast. I would like to welcome you to today's online presentation, ACA's Big Issues, Tactical Aspects of Employer Plan Reporting. Now I would like to introduce you to our speakers. Today we have Joanne Husted, Vice President, National Health Compliance Deputy Practice Leader, and Rick Johnson, Senior Vice President, National Public Sector Health Practice Leader. With that, I will turn things over to Rick to begin today's presentation.
And thank you, Dana, and welcome to this webinar series. My name is Rick Johnson. As Dana indicated, I'm the National Public Sector Health Practice Leader for Segal. Today we're going to be covering what public sector employers need to know about the new Internal Revenue Code Section 6055 and 6056 reporting under the Affordable Care Act. These new annual reporting requirements go into effect for calendar year 2015, in other words, the current year, with the first reporting due to employees, health plan participants, and the IRS in early 2016. The reporting, as it gets to the IRS, will enable them to implement the employer shared responsibility penalty to determine whether individuals have met their individual mandate to have health coverage in place. The reporting will also help the IRS determine whether employees and their family members were eligible to receive a premium assistance tax credit if they purchased their health insurance through a state exchange or marketplace. Today's session is intended to be a deep dive into the specifics you need to know about this new reporting, about the forms, and about the aspects and issues you may be facing as public employers getting ready for this reporting. My colleague, Joanne Husted, who is in Segal's National Health Compliance Practice, will be the primary presenter today. And as another reminder for those of you just joining, you can use the Q&A function at the bottom right of your screen to ask questions to us, and we will address those at the end after the presentation. So now I'll hand it over to Joanne. Joanne?
Thank you very much, Rick. As Rick said, the reporting is required to enable the IRS to enforce three different new tax code provisions that were created by the Affordable Care Act. The first is the employer shared responsibility penalty, and this is in bold on this slide because it is the most important from a large employer's perspective. And we're going to talk a bit more about this penalty in just a moment. The second is the individual shared responsibility penalty. This is the requirement that individuals have coverage in place or pay a tax penalty. Because of the individual mandate, the reporting forms capture actual enrollment in group coverage. And third, the premium assistance tax credits. These are the federal subsidies that people can get, if eligible, when they purchase coverage through an exchange or marketplace. This is relevant to employer reporting because individuals who are eligible for affordable minimum value group coverage do not qualify for tax credits. And if they enroll in a group health plan, even if that plan does not meet the affordability and minimum value standards, they are also not eligible for a tax credit. This slide shows the basic framework for today's webinar. Before you can tackle ACA reporting, you need to understand the employer penalty rules. The concepts that are defined in the employer penalty rules dictate whether and how you complete the reporting forms.